Hi, so I had a message from one of you about negative interest rates. If they were imposed by the US and the UK, what kind of impact that might have. I mean, I guess nobody really knows. There's always a bit of crystal ball gazing, but obviously we've had negative interest rates for quite some time now in Japan, Europe, Sweden, Switzerland. They've all had negative interest rates for a little while, and I think generally what happens is people just adjust to the negative interest rates, and it's kind of business as usual. What it really punishes, though, are banks and financial institutions, and everybody thinks because of the lending side of the business, but actually the lending side of the business, it's been shown in Europe that remains relatively robust, because you can't borrow money at negative interest rates, although I think there was a Danish bank that was doing a negative mortgage rate, but generally you still have to pay an interest rate when you borrow money. What the real challenge is that banks have to maintain certain levels of liquidity, so they have to have a certain amount of cash on their balance sheet at any given time, and then that cash basically costs them money to hold. So at midnight every night they have to hand over to the central bank the negative interest payment on their cash reserves, and at the same time the central bank is stress testing them constantly to make sure they have enough cash reserves. And this has been really hurting the European banks, particularly people like Deutsche Bank, which has got a huge balance sheet, and so has to maintain really large amounts of liquidity. This has been really hurting them, and obviously with the UK being a major financial centre, that would have a big impact, and obviously the US as an even bigger financial centre, negative interest rates would have a big impact on its financial institutions, as they have to maintain liquidity, and there's such a cost of doing that. So yeah, I think we've shown that there hasn't been a big impact in the places where it has been deployed. But of course we never know until it is. Although I think most of the stimulus that they're focusing on at the moment is direct cash injection, so fiscal and monetary stimulus directly into businesses and people's hands, rather than the traditional levers of things like interest rates. So that would be my answer.
Bye bye.